Okay, so for today of the live trader episode, we're going to be taking a look at the financial markets, going through a few different charts. So, yeah, for the first and the first live trading session I've done, I am still getting to know the system, but it seems like everything's working. So, bear with me. Could take some time to adjust. There are so many different screens that I'm looking at that are watching me as well. So it's definitely been interesting getting to know the different systems. But let's get started. So, welcome. Just to give you an introduction, my name is Morgan and I'm the head of trading at MS Equities Trading. I've been trading for over a decade and I have been teaching students in over 30 countries around the world for close to a decade as well. So, to kick things off with these live trader sessions, I want to be able to use them to show my daily analytical process for how I break down the financial markets and how I hunt for trade opportunities. How I also take a look at open positions and then review past trades. So, trades that have already been closed and that will at least give viewers the opportunity to learn a bit more about my analytical process and be able to use the knowledge that I share with others in the financial markets. So, just to kick things off, I usually take a look at the VIX volatility index just to see what the markets are looking like. So, in one of the previous videos, let me just pull that video up. In the video how to trade forex for beginners, I think it was that. Let me just show you. It was one of these two here. I spoke about the VIX volatility index and how the VIX was sitting right down on this historic support level. And as you can see here, going back to quite a while back, you can see there's a very strong historic support zone in these areas. So let me just throw up some arrows. You can see around about this area here. And then going back further, you can see how the support level for the VIX has been quite strongly tested. It's a bit of a zone. So a zone is where there's more than one support level identified. So you can see this is the low of the market right now. And what I'd said in that previous video was that the market was finding that bottom and it was probably going to bounce off of it. Warning. Just give me a moment here. Okay, well, I'm getting a warning that I've got to change the bit rate, but this is going to be my own challenge. I think what I'm going to do is see if I can continue as is. Let me just quickly sort this out quickly. Okay, well, it's saying that my bitrate is low, but let's see if I can carry on streaming and hopefully there's not going to be an issue. But we'll just have to wait and see. So for the VIX volatility index, what I normally take a look at is where the market is currently sitting. It gives me a better idea of what sort of volatility we're looking at. So when I initially came out with it, I saw that this market was sitting at the historic lows. So I knew that the chances that the market was going to continue moving lower was quite low. Um, and in this stream, in the video, I actually said that I expect the market to move back up higher to the 1850s region. And that's basically exactly what we saw. You can see the market spiked up to 1885, and there was a gap. So I knew that normally when the market has a gap, the gap will be filled, and that gap was filled. So I was able to take this trade short into this position. I watched that the market was on the hourly chart, watching over here. I was basically seeing that there was a volatility funnel being set up. So I saw that this market was priming for a breakout, and I knew that breakout was probably going to be to the downside. So I shorted into this position, and I managed to hold this position to the downside. Now, what actually happened was I shorted into this position around about here, around about the 1860s region, and that position was held down to the bottom here. And what I thought is that setting up a fib was probably going to be my best bet. So what I actually made use of is just setting up a simple fib from the low to the high, and inside this 50% region, I cut that trade. So it was somewhere around about this area. It was on one of these levels, and I thought that this market was going to start retracing and moving higher again over here. But I was wrong, and the market continued to move lower. But again, you got a much wider spread on the VIX, so I was not extremely concerned about that little bit of money I missed out on. I still saw it as a good trade opportunity, and yeah, I usually see somewhere inside of the fib region. If I use the 50 to 60 region, I'll expect a retracement somewhere in that area. So when you get these markets that gap open, the market will normally fill the gap, and it was a great trade to be able to take on the VIX. So again, you can see the market's been moving back to this low level. Now, the market did spike up once again. It spiked up to this 1859, 1860s region, and then pulled back once again. Once it pulled back to this area, you could see that now the market is consolidating around the 1670s level. So I'm not exactly concerned about it. You know, there's not a lot of market volatility. You can see here how the market had committed to a very similar pattern where you can see these spikes continuing to move lower. So you can see over here, these markets were showing that it was continuously moving moving lower, but it was having continuous spikes. So from my perspective, I would think that this market could continue behaving in the same way and finding a low point somewhere around about this region. So for now, I'm not too concerned about the VIX. I'm going to leave that for now and then focus on the trade that I really wanted to take a look at. So that is Bitcoin. So if I just take a look at the Bitcoin charts, I've been watching Bitcoin sell off from the highs of the 123s. So Bitcoin has been sitting around about 123,000. And I'm just going to be doing some notes here. So previous high, normally what I'll do is I'll just take a look at levels. So let me just do a clean chart here for you. So to start out with, I'll normally set up my support and resistance levels. So I'll go to the previous high and then just work my way down from there. So setting it up on the daily charts makes life a little bit easier. I'll usually go from the previous high to the next historic low, wherever that might be. So I'll just usually say I'll find a low and then a high and then a low and a high. So over here you can see there's a level roundabout there as well. There's a level sitting around about over here. And then this just allows me to set up my zones. So the support and resistance zones are very important. That allows you to figure out where the market is coming from, where the market could be going to. And as you can see, zooming out, you can see how historically where the market was sitting around about over here. So let me just trying to get these to stand out nicely. So you can see that the markets here have been respecting these support and resistance levels. And that has been quite important to, this just shows how important it is to set up your historic support and resistance levels, because historically, when you go back into the charts, then you can normally figure out why those levels are being respected. So these are definitely some strong support and resistance levels. So the previous historic high, I'm just going to set that one up. So I'll just call it the previous one historic high. We're sitting in the region of 124,387. I'm going to call it that. 24387. And then moving down to the historic low. So that is the most recent low where the market has been sitting. We're sitting at here around about 107,271. So that has been the current movement. So if I just take a calculator, I'll just subtract 124,387 minus 107,271. So we're looking at a $17,000 pullback. So therefore, 17,116 retracement. So that gives me a great indication of what the market has been doing lately. And it gives me a good idea of what the movement has been looking like from the previous high to the current low. And that just gives me some numbers to give me a better idea of how far has the market moved, where's the market going to currently. So Setting up these support and resistance levels allows me to just see where my zones are going to be. For me personally, I can see that this is going to be quite a strong historic zone here. But as you can see, when the market pulled back here, it broke down below those previous historic levels quite strongly. It went quite far back down. So if I go to calling this the previous pullback, so this can be the next potential pullback, and this can be the historic pullback. If I look at that high, we're sitting at 109, and here it's 74. So uh, so the previous pullback was about a $35,000 move. Now, a $35,000 move is quite a strong move in the previous pullback, and as you can see here, this pullback is still in process. So the reason why I've been analyzing the Bitcoin charts is because I've been predicting that Bitcoin is going to move down to a level of about $100,000 and then bounce. So if we were to look at the $100,000 level, the $100,000 level is sitting uh, roundabout inside this level over here. So if I just take this, there we go, sitting right over there. So I'm just going to highlight this one as my red zone. Gives you a great idea of where I think the market is going to be moving to. So this is obviously confirmation bias. This is not that I genuinely believe the market could be moving to this level. The reason why I think 100,000 is going to be a strong level is because it's a whole number resistance. Whole number resistance levels are well known for a strong support level. And as you can see over here, historically, we had the market come to this level, break straight through it, and then pull straight back. So it really leveled itself out at this level here. The market reached a double top. So you can see on where I've got these arrows set up here, the market basically hit that level and moved. I don't know why I've got double arrows here. Oh, I've got triple arrows. Oh, I wonder how many arrows I copied over from here. Okay, it was only 3. Where am I going to put this arrow now? Okay, I'm going to put it over here. So you can see on this very historic move, the market broke right above this $100,000 level. As you can see, historically, the market had not hit $100,000 on Bitcoin. So it was a historic break. And once the market moved beyond that level, you can see that it reached a double top and it pulled back. So that is also an important thing to realize, is that this market hit this double top level right over here. I'm just going to put up a trend line to just show you what I'm explaining. Hit this double top and pulled straight back. So you can see how it really moved all the way back down. It pulled back up again and pulled down again below that $100,000 level, and then it did it once again. So it's important to realize that historically, let's call this 6th of Jan. So it was quite interesting. It was the break, literally, check this, 1st to the 1st, we've got this massive break above. So literally right on the new year, we had Bitcoin breaking above $100,000 and then pulling back. So this is definitely a big piece of information for us to remember as historic information when going forward. But then you can see over here, the market pulled back down below that $100,000 level. There was obviously sellers stepping in, anticipating that the market was going to be continuing back down. And that's why we had that, what was the value here? $35,000 sell-off. So the market hit this whole number resistance level and then had quite a strong sell-off. Now, that is important to realize because what could be the opportunity here that we're looking at currently is that the market is now pushing up to $124,000, give or take. Now, it's in a pullback motion, and we could see the same thing happening. We could see this market hit this $100,000 level. And again, just like you saw, the sellers stepping in, because why? It's $100,000. It's a whole number of resistance levels. So the market is looking at it saying, there's no way that we're going to have Bitcoin moving above $100,000. And the sellers stepped in and really put a lot of downward pressure on that Bitcoin market, that Bitcoin price. And then all of a sudden, you saw the sellers step back in and say, hang on a second, there's actually value to this asset. So the sellers step back in, and you can see how the market made a really strong push up to the top, broke straight above the previous historic level. So if I were to take this these trend lines away, and you can see here this level was sitting around about $100,000, $107,000. We're looking at $108,000 was the double top at the beginning of the year. So we've got a beautiful double top forming up here. And then you can see after this bull run, this market pushed all the way up to the top and hit this level, pushed way beyond $108,000. It had a push all the way up to 111, came back, and then pushed straight back up to 110, and then pulled back to that $100,000 level. So it's showing a Gartley formation where past support or past resistance is now future support. And you can see now that the market has decided it's going to stick beyond this $100,000 level. Once it moved beyond that level, you can see how the market pushed all the way up to 123 or 120, 122, 123 basically. Came all the way back down to what is it? Past resistance, future support. So where this market was hitting the level of 111, 110, all of a sudden the market's pulling back to that level and bouncing off of it. So that's what I'm trying to show you here is psychologically, there's definitely going to be an opportunity for this market to be hitting that level and pulling back from it. So if I'm just able to provide some historic information here. So Jan 25th, Jan 1st, 2025, we had, I'm going to get the exact number here, the 6th of the 12th. So I'm going to say here 100K resistance on Bitcoin, Bitcoin broken on the 6th of the 12th, 24. And then what I'm just going to say here is push to 108. Okay, and then pull back. Pull back all the way down to the lows of, let's make it the 90s level. So it pulled back all the way to 90K. So there was about an $18,000 sell-off, and then push again back to same level, gonna say 108K. So I'm just gonna show you here, W formation, 108, 108, and then in the center we had a push to 102. And then the pullback sitting here, we're sitting at a low of about 92 and a low here of about 89. So 92, 89. So this just gives me a much better idea of where this market at that period of time between it breaking through that whole number resistance of $100,000. That piece of information is going to be very important because what you're doing here is seeing that this historic level of $100,000 on Bitcoin being broken is very important. So being able to document that information is going to help you with your trading plan going forward. So as you can see after this double top, so I'm just going to say here double top formed. And then I'm just going to say here as well, W formation, which is a Gartley as well. Some people will call it a harmonic pattern. So it just depends on what your naming of the patterns could be. And I would really recommend this. This gives you a great backing when you're analyzing information, is to just be able to document all the information down on a piece of paper, that you've got your workings, you've got all the information that you need, so that when you need to refer back to it in the future, you've got that information, because that is very important. You know, you can get easily lost in trades when you're analyzing and taking a look at the financial markets and you're not entirely sure what could happen next. Being able to refer back to your notes is going to be extremely helpful for you. So beyond that, you can see that afterwards we had a pullback to, so we had that 35K pullback. So I'm just going to say here 35K pullback. And that 35K pullback, I'm going to go all the way down here to 73,800 to 73K. And then we had that very strong push. You can see here how the market on this zone right over here, you can see how the market broke straight through that $100,000 whole number resistance. So you can see that the confidence in the market with this bullish candle is extremely confirming. It's a great confirmation to see that the market is now, it has regained its energy. There's been that pullback to 73,000, and all of a sudden the market just decides we're going above 100. So you can see that the market had a very strong push above 100. So for any financial trader in this position, when the market breaks 100, you're really going to be wanting to take this trade. Now, for me, I didn't take this initial trade, but I did take the trade on the bounce, and I hold that position. So you can see that the market broke 100,000, reached this top, and what is the level that it reaches? It reaches up all the way to, let's call it 112. So I'm going to say push from 73K to 112K. Once it hit that 112K mark, it pulled back to where? The $100,000 level. So what I was saying before, past resistance is future support. That's exactly what you're seeing here. Past resistance, future support. So push from 73K to 112, pull back K, and then it pushed to 111K. And then it pulled back to the same level. It pulled back to 98. So the market did on a daily candle break below that $100,000 level. But then you can see here, so if you take a look at this very closely. Okay, so you got this extremely bullish candle over here. And then what have you got over here? You've got another really nice bullish candle. Okay, I don't want to start deleting these arrows. So you've got over here a very strong bullish candle breaking above that 100K mark. Then all of a sudden you got the market that breaks below that 100K. What is the next daily candle? It's a bullish engulfing candle. Bullish engulfing candles show high volume, high buying pressure, which is a great indicator that the market wants to stay above $100,000. So at this time, Bitcoin was definitely showing that the market did not want to go back below $100,000, and the buyers were continuously stepping in. So seeing what we saw after this double top here, it was a great indicator for any trader out there to decide, okay, we're going to step in and buy in Bitcoin. And I also took this position on Bitcoin and I held it. So I was saying to you, I didn't get in on the initial break. So I saw the market flattening out over here and I decided to get in. I can't remember exactly where it is. I know I got in at about 104K. So 104 was probably somewhere up over here. Yeah. I remember I bought in at about 104 and I covered at 106. So I saw this bearish candle stepping in here and I thought to myself, okay, there's definitely going to be a bearish market. I think it was somewhere around about, yeah, I think I covered right at the bottom of this candle here. So I got scared out of the market a little bit with this bearish engulfing candle, which was unfortunate because the market immediately retraced on me. So I should have stuck on. I should have stuck in with this trade. But when I saw the market pull back to this $100,000 level, I immediately entered in on another position and I held that trade back up to the top. So I could see that there was a range forming over here. The market was definitely showing it wanted to sit within this channel, and that channel was a very powerful price channel that was forming on Bitcoin. So, like I said, this bullish engulfing candle breaking above 100, and then this bullish engulfing candle basically continuing back above 100 showed that the buyers are going to be stepping in. So, holding this position up to the top was easy. I held that position up to 112 because what happened over here, you can see this market stepping in at 111. So when this market started to step in and I saw this bullish engulfing candle, I decided that I was going to cut my position. So I had three trades on this. I had the one trade that was sitting around about here. I went in about 104. I covered at 106 in a really bad position. I stepped in again somewhere around about here. And then I covered at about, I think it was 109, give or take. And that was also a really good trade. And then basically I stepped in again on this bullish engulfing candle as I saw the market stepping back above this $100,000 level. There was a lot of power to this day of trading. But again, I mentioned to you, I covered on this this bearish engulfing candle. I was expecting the market to pull all the way back down, and it didn't. So I did lose out on quite a bit of profit on this trade. But again, three successful trades on this. There's no reason to move beyond it and make more trades. Sometimes people can overtrade a market or overtrade an asset. You have to be careful about that. You don't want to get into that position as well. So as you can see, after the market broke above this $112,000 level, so I'm just going to say here, push to 111K. So pull back to $100,000, push to 111, pull back to 98. And then I'm going to say again, push to pull back to 98, and then it pushed all the way to up over here, 123. So push to 1, 2, 3. And what I normally do here is I just create a bit of a drawing just to remind myself of what the market looked like. So as you can see here, I'm just creating a simple chart over here that just gives me a visual representation of exactly what numbers I've just written down that I can see on the chart. I can see on my piece of paper where those numbers correlate to what the pattern looks like. And then that allows me to think to myself, okay, so the market created a W formation in its previous move, and then there was a big pullback. Then it created a price channel and broke above that price channel. So what's happening here? Previous resistance is future support. So it's just giving me an idea that when I look up at the chart, I can see, okay, that's what it is. And I look back down and I think to myself, I know what I'm looking at. It's rudimentary. I know it's very, very basic, but it works. I'm not going to lie to you. It really does work. Okay, so once we had that push to 123, we had the market pull back. So I've got here push to 123. So I'll just, for my new page, I'm just going to say from 123, pull back to this level around about here. What is that level sitting at? So 112. So as you can see here, uh, past resistance becomes future support. So you can see how where on these two levels here, the market tested that level as a resistance. Now all of a sudden the market is pulling back to it as a support level. So this stuff, these price charts they can look quite random and confusing, but once you actually dig deep, you dig down into it, you all of a sudden realize there's method to the madness. And a lot of this is where the sellers are watching this price. Buyers and sellers are watching these prices and seeing, okay, it's hit that historic resistance level, support that historic resistance level. Let's step in and start buying. So you can see how the market hit that 112 level. So from 123, pull back to 112. And then you can see here the push broke above that level. So it's sitting at 124. So push to 124. And then now we've had that pullback down back to this level of 107. So the interesting part with 107 is you can see how the market pushed all the way to this level over here. So this is where the important information is going to be. Okay. So on this level, look at this bullish engulfing candle, okay? So you can see right up over here is this really strong bullish engulfing candle. So as you can see, historically, this bullish engulfing candle basically took out the last three candles of price data, the last three bearish candles. That's 3 days worth of price trading that it just took out immediately. Now, over here, you got the same thing. 1, 2, 3, 4. So 3 bearish candles in there. This bullish engulfing candle bounced off what? The 112 level, and it took out all of the previous day's trading. All of that bearish move all of a sudden pushes all the way up to the 14 EMA, strikes that level. Now, what are you thinking? It's another W formation. Why? Look at this price channel. Same thing happened. We have this push, pull back, pull back, and all of a sudden bullish engulfing candles. So all the buyers are thinking, definitely we're going to have another push back to the 124 level, except it doesn't do that. It pulls back. And as you can see here, look at the bearish candles. Look at what the bearish candles look like. There are some big bearish candles stepping in on Bitcoin. So you can see how since this bullish engulfing candle, that was on the 22nd of August. So it was actually a day before my birthday. 22nd of August. And that's probably why I didn't watch this trade. Luckily, I didn't get in on this. Uh, you know, this market definitely showed that it wasn't going to be moving any higher. And that is why I'm looking at this trade having a possible pullback, because I feel like the energy moving to the 124 level, it's been completely expended. Now, that is complete confirmation bias. I'm not saying to you that I know where the market is going to move next, but I am giving a general overview of what I think about this trade that you can go forward yourself and you can take a better you can take a better snapshot of it and decide what you think the market is going to do going forward. So we had that push to 124. What do we have? We have pullback to 112. So that pullback to 112 was important. Why? Because we had a fake out. So fake out engulfing, fake bullish engulfing, all the way up to what level? 117. So that was a $5,000 move in a single day. Fake bullish engulfing to 117, and then a complete breakdown. And what I'm going to say here is we got a breakdown all the way to what level? Let's go down to this level over here. We have a breakdown to the 107. So the market pushed all the way up to from the 112. So remember, past support, past resistance, future support. So we have the market test the 112. So the market breaks the 111. Let me just go back here. So we have the market over here, pushes to 112, pulls back to 100, pushes to 111, pulls back to 98, pushes to 112, has a bearish engulfing. I get scared out of my trade, and all of a sudden, market takes over, push to 123. Where does it pull back to? 112. Push to where? 124. Pull back to where? 112. Bullish engulfing to 117, then all of a sudden breaks all the way back down to 107. So that is why I'm thinking in this current position, I am wondering if the market is possibly going to fall a bit further. Because why? Look at all this market structure back here. This is some really clean market movement. The market is showing really easy and simple price structure. But now all of a sudden, that price structure is gone. That this is not very clean price structure. So that is why I'm thinking, is the market going to pull back to 107 or is it going to pull back to this 100 level once again? Now, I keep saying this. This is confirmation bias. I'm behaving like, oh, I know where the market is going to go. That's not the truth. I have no idea where the market is gonna go. If I knew, I would not be sitting here filming a YouTube video right now. I can promise you that. But you can see here that the market in this level had quite a strong support and resistance at this 107. So this is also where I'm being wary of my train of thought, is that perhaps the market was breaking down to this 107 and it's going to have this as its new support zone, and you're going to see the market bounce off of one of these levels. So here's my idea to wrap it up, because now we're at the end of that price movement. Okay. So we have one of three things. We have a continuation. Okay. Continuation means if the market continues moving, where's it going to move to? We have a retracement. And what else do we have? We have a range. Okay. So if I were to give facts, so these are facts, this is what I can see in the market, is now the market is in a downtrend. Okay. So if the market continues in a downtrend, where could the continuation be to? Okay, first one could be where? 107K. So you can see this is a strong level over here. So 107K is going to be my number one continuation zone. Where could number two be? It would be 100K, because you can see that's my next level. Now, there is definitely an argument to be made about this point here where the market pulled back, but as you can see, the market traded sideways. So it wasn't as if the market pulled back from this level. It actually did break through that level quite quickly. So the next continuation would be 100K. Okay. Now, a retracement. So if the market were to retrace, so now let's say this market currently is in a downtrend, it's below the EMA, so it's in a downtrend. If this market was to push higher, where could the market move to? Okay, so this market over here is currently sitting on that 111, 112 zone. So as you can see, historic resistance. This is where that historic resistance is. Is that market going to test the level and move lower? Possibly it could. That's going to be the interesting thing. So currently this is not going to be level number one because it's already there. So where would level number two be? It's going to be sitting at 124K, far away. It's important to remember that it's far away. So 117 could be zone one. I'm going to make 117 zone one right over here. Okay. Zone number one, 117K. Why? You can see that the market traded inside of this zone. It created its own price range and then broke down from that price range. So I'm going to say that 117 could be retracement target one. Okay. Where could retracement target two be? Retracement target two, I would call roughly where the top of this range was, which is going to be 120. Okay. So for the possible zones, for the continuation zones, our possible range for a tighter range could be anything between 117 and 107. Here, the possible wider zone is 120 to 100. Okay. So that, factually speaking, is the best suggestion I can give for where could the market be moving to next. For me personally, I want to see this market break down to 100,000. I think 100,000 zone of Bitcoin is going to be a very strong whole number resistance. You can see that this market has broken down from this level and has continued its downtrend. If I were to go into the hourly, you can see over here that there has been a downtrend, but that downtrend has been broken. So you can see how the market has continued moving lower, and all of a sudden that trend has been broken. And now that market's starting to move higher again. So that could be a suggestion that we could see the market actually break this trend and start to move higher. Or you could see this market do something a little bit more than this and create its own range over here. And price is going to start trading sideways within this zone. So as you can see, there's a lot of resistance over here. And there's also some strong supports over here as well in these two zones. So for me personally, that's going to be my take on Bitcoin currently. I'm going to be doing a video on this going forward. So I'm going to be condensing all of the information I spoke to you about today, currently sitting close to midnight where I am. So I'm going to be wrapping this video up. But I've given you quite a lot of good information about Bitcoin, about the trade idea that I have, my inner workings with the idea. So you'd be able to watch this video over again to give you a better understanding of what I believe the market could be doing going forward. And then you can decide for yourself. Once again, this is for educational purposes only. This is not because I'm trying to give you financial advice and tell you where to invest your money. That is entirely up to you. So probably by Sunday, so we're sitting Friday, 5th of the 9th, I think by Sunday, I'm going to have a video uploaded on Bitcoin about where I think the future of Bitcoin could be. I'm going to rub my mystical ball and see what it tells me. No, I'm joking. I really do take this seriously, and I'm not going to have any ball rubbing involved. But once again, I hope you all enjoyed this video. It's the first live stream that we've done. So yeah, was interesting to do it for the first time. I really enjoyed it, and I look forward to doing many more live streams going forward in the future. Once again, thank you so much for tuning in. If you want to find out more about our channel, make sure to go up onto the YouTube page and you'll see there are tons of interesting videos. You can see these are some of my latest uploads. These were some of the latest videos. Trading this breakout, that was an amazing trade I made on gold. Really, really good trade. There's a lot of cool information in that video that you can learn from. So this was the trade. This was the review after the trade was done. This was before I did the trade, this previous video. And then this one was to prepare for the week ahead. So what I do for the week ahead. And then this was analyzing Euro US dollar and one or two other trades. Then in terms of popular content, there's some pretty cool trade ideas up here. This one, my most popular video was how to scalp trading the Dow Jones. That was a really awesome video. How to spot a Forex scam, ironically, is one of my most popular videos I've ever done. I think that's because so many people get scammed. If you want to learn more about how to trade the stochastic properly, go and watch that video. I make use of some pretty cool tools in that video. And then just continue down the charts or continue down the library. There are tons of videos up here that I've uploaded. Make sure to go take a look. And if you want to find out more, go to our website, mse.academy, or email study@mse.academy. We do trading courses, we do one-on-one coaching, and very soon we're going to be setting up some membership programs as well. So I hope you enjoyed it. I am going to go and get some rest, and I'll make sure to see you in the next video. Cheers for now, everyone.